Driving business.
A very good evening, ladies and gentlemen, and a warm welcome to the show. Thank you for tuning into Smart 24 TV, and I'm very excited that you are joining us today on the 6th day of March 2024. It's a new month and a fresh look for us here on financial markets, and we're going to be giving you a lot of insights into financial statements that are being released. We're also going to be sharing with you some of the insightful discussions from different stakeholders within these companies that are listed. It is a season when the year is ending. The financial year is ending for some companies, and for some companies it's already halfway and they're releasing their financial results. And we are very excited that we're going to be bringing you all the action as it unfolds for all these companies and basically give you a fresh touch on the financial markets platforms here in the East African region. My name is Anthony Sebale, and you're most welcome. Let's start first of all with what's happening currently in the Ugandan Central Bank, the Bank of Uganda. Now, understanding the Bank of Uganda monetary position is very key to understanding the financial markets within the region. Within the region, we have a couple of central banks with Kenya, Commercial Bank, rather the Central Bank of Kenya, the Central Bank of Tanzania, and the Central Bank of Uganda taking a center stage. However, today, the Bank of Uganda read the March 2024 monetary policy statement, by which the Monetary Policy Committee communicates the decisions made and how they impact the economy as a whole. Core objectives of the Monetary Policy Committee statement by the Bank of Uganda and the driving force of these decisions are, first of all, the Bank of Uganda's primary objective is to maintain a low and stable inflation. Now, the mandate of the Bank of Uganda is to ensure that inflation, or the average rise in prices of commodities, be it fuel, be it food, be it any other commodities, is kept within check. The Bank of Uganda, with a medium-term target of at least 5.0% for the core inflation, puts a lot of effort into stabilizing the economy through stabilizing the average rise in prices, which is famously known as inflation. Now, the secondary objective is to support economic growth. Of course, from the primary objective, we derive the second objective. With prices at least relatively lower, citizens can afford commodities and basic needs of life. And that means that the standards of living within the country are going to be on average above what we expect on an average person. And so every individual will be able to access those. Crime rates will go down, stability in the economy will be witnessed, and politics as well will stabilize. You understand that politically stable countries are also famously or popularly very, very stable financially or economically. So it's a very key and pertinent issue to look at when you look at the economics of a country. Now, Bank of Uganda also pursues a flexible exchange rate policy, intervening in the foreign exchange market only to dampen the disruptive volatility in the exchange rate. The exchange rate is the rate at which one currency can be converted into another. And for us as a country, our denomination is the Ugandan shilling. Most of the transactions are Ugandan shillings denominated. And I'll give you a scenario, a very simple scenario where we have the dollar right now taking lead of the Ugandan shillings. As per last, let's check right now, just as I speak right now, and I'm coming into you live from plot 42, Nile Avenue, Kampala. $1 is at 3,916.3187 shillings. That means to get one single dollar, you need 3,900 shillings, approximately 4,000 shillings. Now, what is the beauty or the dark side of this? When you have a currency too strong, you're going to be able to dominate most of the transactions. And of course, it comes from dominance. when we are exporting more than we are importing, it means that we are exporting. So people are buying our currency to be able to buy our products. Other countries are buying our currency to be able to purchase our products. And when they do so, what happens is our currency goes on demand. And we know the rules of economics. The higher the demand, you know what happens? Yes, the higher the demand on a product, the much higher the price, right? You know that price and demand curve, and then the supply and demand curve. The demand goes up, prices go up. Supply goes up, prices go down. That's simple, basic economics. And that's what the Bank of Uganda is up to, ensuring that this currency of ours is at a stable price. Now, when you look at the past few days and the past few weeks, the depreciation of the Ugandan shillings against the US dollar and the reduced capital inflows present big challenges to the Monetary Policy Committee. The depreciation of the shillings makes imports more expensive, and thus impacting inflation. Now, the other way around weakens the currency. For example, when you are exporting less than you're importing, meaning you're importing more products, you're going to be purchasing a lot of dollars because you're importing from countries which are basically their commodities are denominated by a dollar. So it means you're going to use your currency to purchase the dollar. You're putting the dollar on demand, hence putting the price of the dollar against your currency at a high end, or at a very steep end. Now, when I look at my graph here from the historical chart in October, the dollar was at least at 3,740 shillings. Today, at 3,918 shillings, we are presented with a very steep growth. Now, there's also another factor, which is the reduced capital flows or inflows. There's been a reduction in foreign remittances in the first 2 months of 2024. Now, capital inflows are from people who go abroad and actually make money and send back to Uganda in form of dollars. Now, that money is called remittances. And these remittances also contribute greatly to the strength of the currency. Why? Because there are currencies that are stronger than ours, which is like the dollar. The more dollars you have, the stronger or the more stable your currency will be. The less dollars you have, you're running short of dollars, you're going to be in a situation where you're weakening your currency. This happened in Kenya, now it's happening in Uganda. And it was nothing but something we did have to expect. On the other hand, you can lead to a slowdown in economic activity if you don't check your capital inflows. These capital inflows do contribute immensely to the stability of a to the stability of the currency. These factors can put pressure on Bank of Uganda and the Monetary Policy Committee. So then how does the committee try to manage or pursue the three objectives all at once? Here's how you do it. Now, the Bank of Uganda's response to these challenges is guided by its forecast of the future path of inflation as well as the exchange rate. If the Bank of Uganda believes that these considerations are tilted on the upside over the 3 to 6 months horizon, it will usually raise the central bank rate. The central bank rate, or the CBR, currently in Uganda is at 9.5%. It was actually decreased in the past Monetary Policy Committee statement from 10% to 9.5% as a result of the stabilizing inflation then, because inflation then was below even the threshold, which is 5%. Now, an increase in the central bank rate usually does slow down demand and consequently reduces inflation, while a decrease in the central bank rate aims at increasing the demand and boosts the overall level of economic activity. Now, what is this central bank rate thing? When you have a central bank rate, it is the rate at which the central bank is lending commercial banks. Now, take a look at what commercial banks are doing. They don't mint money. Commercial banks don't print any money. What they do is that they borrow money from the central bank at a specific interest rate. They use that money to lend to you, the individuals, to lend to institutions, to lend to businesses. And those businesses, those individuals, those institutions return that money with interest. Now, those interest rates are moving in tandem with the central bank rate because you have to pay that back. Let's take a look, for example, currently the interest rate, the central bank rate is at 9.5%. Now, if it's at 9.5%, the current average interbank and commercial bank rate is about 18%, depending on the bank, of course. It's not one for all. But you're looking at a higher central bank rate, rather a higher commercial bank rate, a lending rate, than the central bank rate. Meaning the math here is the entire burden of the transactions, the entire burden of the entire burden of the interest is pushed to the individuals who are borrowing. That means if the central bank rate is increased, it will push on into the commercial bank rates lending. And the commercial bank's lending rate, when increased, will lower the demand on credit. Meaning individuals, businesses, private sector will not be as on the bank's case to borrow money because it's expensive to borrow at high interest rates. No one wants to pay 20%. I mean, you take out 100 million and after 1 year you're returning 120 million. How much money are you going to make from 100 million to be able to return 120 million? That's a pretty good scenario. You're getting 1 million as a loan and you're returning 1,200,000 within a period of 1 year. That's the annual rate. And this is what the central bank is all about with all its monetary policy. I just wanted to start there so we can get a clear picture of what's currently happening within the central bank perspective and within the perspective of the Monetary Policy Committee that was held last week. Now, let's look at the Stanbic performance. Stanbic issued results, MTN issued results, and we are going to break down for you some of these performances. Yesterday, Stanbic Bank Uganda officially announced the promotion of their CEO as well, Madam Anne Juko, to the regional global markets in charge of 7 East African countries, and she is now currently has been at the forefront since the year 2020 after succeeding Patrick Muheire, who was the former managing director of the institution. She, in her very first 4 years, catapulted the company's market capitalization from 1.3 trillion Ugandan shillings at the initial part of 2020 to an impressive 1.66 trillion. That's a rise of over 360 billion by the end of Feb 2024, and also helping the share price to rise from the lows of 20 Ugandan shillings on the exchange to the current 32.5 Ugandan shillings currently. Stanbic's performance during the tenure of Anne Juko has been catapulting ever since she stepped into office. On average, Anne stepped into office in 2020 with the average price at 20, 21 and the highest at 22. They have seen a growth of 10 shillings for every share rather, on the exchange since that time. Within just a 4-year span, Anne has also helped to see Stanbic's total revenue grow by over 50% from the lows of 831 billion Ugandan shillings in 2019-2020 fiscal year to over the projected 1.3 trillion by ending December 2023 and maintaining its biggest bank brand. No other bank is coming even close. Looking at the total revenue here, it has been growing consequently over the years. Now, what can we say about Stanbic? Stanbic Bank under Juko has been akin to perpetual money-making machines. Over the past 6 years, 4 of which have been under Anne Juko as CEO, it has consistently amassed profits averaging 250 billion shillings after tax. Taking 2022, for example, alone, the bank generated an astounding 357 billion profit before tax. And this level of financial triumph isn't just a one-off event. They aim at replicating if not surpassing this success in their 2023, as per the projections or the figures that analysts are projecting. The continuous value generation of this magnitude makes Stanbic Bank a stalwart force that powerfully impacts the Uganda Securities Exchange and makes a desired stock for every investor on the stock market. Very impressive performance. Furthermore, the bank's return on equity in 2022 was an impressive 21.6%, and marking up at an upsurge of more than 100 basis points from the previous year. And we are yet to see the results of December 2023, which are anticipated to be ceiling-shattering for the Iron Lady in her first full year in charge of the biggest bank here, and has achieved so much in a short time. And from all of us, we are really saying congratulations to you, Madam Anjuko, from Financial Markets team, and from me personally, you're really a great inspiration for all CEOs and all young people and ladies as well who are in such positions. Really, Stanbic has had an outstanding performance, and Madam CEO Anjuko, as well as other leaders who have been helping her push the company to greater heights. Away from Stanbic, another company that has been making news on the exchange is MTN Uganda after the release of its financial results. Let's have a look. Okay, let's start with Airtel Uganda. Airtel Uganda also did issue their financial results or statements. There's a lot, and we're going to be breaking down these for a couple of weeks from now, and we will be giving you different views from different people across the board. Now, the directors of Airtel were pleased to announce that the 31st December 2023 fiscal results and reports had been presented. And definitely, this is something that we are delighted to share with you. But one of the highlights for, let's see, the highlights for this revenue. Let's look at the revenues of Airtel. Airtel Uganda achieved considerable growth in 2023. Remember, this was the year that the company also got listed in November, surpassing expectations of their gross revenue growth at least 1.7 trillion. Airtel Uganda had a remarkable 11.5% increase in compared to the 1.5 trillion in their 2022. Yes, revenues grew. They grew there, and that's a very impressive performance. Exceptional performance reflects their unwavering commitment to innovation and customer satisfaction, as well as operational excellence. Now, data revenue and value-added services saw significant growth also in the past year, reaching at least 776 billion Ugandan shillings compared to 657 billion in 2022. This increase was primarily driven by a rise in the data usage, with more customers accessing data services. Voice revenue as well increased, at least reaching 899 billion from at least 870 billion in the year 2022. Now let's look at what is in there for you as a shareholder, the operating profits. Now, operating profits for 2023 were at least over 592 billion shillings, an operating margin of at least 33.2%. Operating profit for the year 2023 was impacted by an increase in the site's running costs due to an increase in the rental and energy costs, in addition to the 399 sites. Now, financial income and costs. The finance charges net of finance income increased to at least 165 billion compared to 142 billion in the year prior. The debt levels also remained sustainable both in the short and the medium term for the telecom. And when you look at the total market debt, that is the bank overdraft plus the term loans, it has also increased from 629 billion in 2022 to 693 billion in 2023. The leverage ratio, including the lease liabilities for 2023, was about 1.57 times of underlying EBITDA as well. When you look at the profit of the year, the profit before tax was 427 billion. Now, these are very important figures for you, especially for the shareholders who are very new at Airtel. Profit before tax, PBT, was at least 427 billion in the year 2023. Whereas when you look at 474 billion in 2022, that is what we had, which was a decline. Yeah. The company reported a profit after tax as well of 297 billion compared to 326 billion in the year 2022. A slight decline there. Now, they're saying that this was mainly as a result of the strong revenue performance, countered by higher operating costs due to the energy costs and operating efficiencies, stable macroeconomics, and a committed team of Airtel staff. Operating costs, of course, usually are what the companies present as the cause for some of the declines in profits. But now let's look at what is in there for the dividends, and the shareholders here need to pay much closer attention. Now, subject to approval by shareholders, the directors recommended a payment of a final dividend of 2.15 shillings per share for the financial year ended 31st December 2023. Now, let's see, 2.15 shillings per share. What is that in terms of percentages? 2.15 divided by, now what is the current price of Airtel? Should be 89. Let's check. What is the current price of Airtel Uganda? I want you to be practical when you're dealing with these matters. It's 87 divided by 87. Now, when you multiply that by 100, that's about 2.47. That's about the dividend yield that we're talking about. All right. They recommended, this is what the shareholders, rather what the directors recommended, 2.15 shillings per share for the financial year ended 31st December 2023. The dividend shall be paid to shareholders registered in the books of the company at the close of business on the 26th of March 2024. Anywhere beyond that, you will not be able to be part of this dividend that is going to be approved very soon. And this dividend is going to be paid by the 15th of April 2024. That is Airtel Uganda for you there. For more results, we're going to be analyzing these results further with experts. I'll be having Airtel officials here, MTN, Investor Relations, this week and next week. So don't worry, we're going to be able to break this down in a language that you and I understand even much better for you to get to know what is currently happening here. Let's get to MTN. Let's have a look at what MTN has in stock for us. Now, MTN was able to also release their financial statements today. And just a few hours ago at 3 p.m. today, MTN was able to actually convene a meeting in which shareholders also got to listen in to some of the salient issues concerning these results. Now, what are some of the salient features of the results? 13.3% increase in number of subscribers to 19.5 million. Data subscribers also increased by 22.4% up to 8.2 million subscribers. Fintech subscribers also increased by 10.1% up to 12.1 million. And then service revenue increased by 16.1% to at least a tune of 2.6 trillion. Amazing stuff, amazing stuff. And the data, and it goes on here to show how the company has really pushed this particular idea, this particular year, and throughout this financial year as well. Now, let's have a look at some of the other facts here, and I'm just going to look at the summary of these results. Let's see. When you look at the data here from MTN Uganda, let's see. Over the course of 2023, they focused on a couple of things, including raising their number of customer base now, which is at currently 19.5 million subscribers. On the fintech side, they pioneered and launched the FMCG Digital Suite, a mobile-based supply chain platform that allows businesses in the fast-growing customer goods to place orders as well, and generate invoices for deliveries, as well as pay and collect returns in real time. And when you look at, let's see, voice revenue, the voice revenue grew by 11.6% on the year, supported by stronger growth in the voice traffic and the optimization of their bundle offering. In the fourth quarter, they also witnessed accelerated growth of 15.2% as a result of aggressive network net acquisitions and adaptation of the festive voice packages. When you look at the data revenue, of course, this was one of their biggest growths at least 21.6%, boosted by a 22.4% increase in their active data subscribers, compelling data packages, and of course, improved smartphone penetration up to 39.1% from 35%. Now, the EBITDA, and this is very important for the company's growth. At least it grew by 16.3%, supported by a stronger revenue performance and focused operational efficiency. In the fourth quarter, they witnessed a stronger growth of at least 19%, and this was consolidated by their costs that were abating of inflation at an average of about 2.5%. Profit after tax. Let's look at the profits. Profits after tax increased by at least 21.4%. Very interesting fact here, to at least a tune of 493 billion shillings, with a higher profit margin of 18.5% in the financial year 2022 compared to 2022, which was about 17.8%. In line with our goal of course, their goal, MTN, of maximizing shareholder value, as per their dividend policy, the board has also been able to approve a proposed dividend of at least 403 billion, translating into 81.7% of payout, in line with their guidance. Capital expenditure also increased, on the other hand, at least by 5.5%, to a tune of 353 billion, as they invested in strategic network capacity enhancements as well. Finally, yes, that's it from MTN. We'll be getting more of that data very soon, so keep around Smart24 TV, and I'll be letting you know when and how MTN is going to be able to perform in the next coming few days. That's it from the reportings. We're waiting for more earnings. New Vision, Cipla, DFCU, and a couple of others will also be reporting very, very soon, with so far seen MTN, Airtel Uganda, and the MTN, Airtel Uganda, as well as the Stanbic Bank company that have so far issued their statements. But we await more this week and probably next week until the end of probably the month of March. A very, very interesting week we're going to have ahead. Now let's have a look at the performance of the Uganda Stock Exchange finally as we close the door. Now at the end of today's session, the exchange saw 7 million shares traded at a total value of 114 million Ugandan shillings. Now the day's data shows an improvement of 12% in the turnover. And when you look at the current market capitalization, it's up to at least 17.1 trillion, which is putting a smile on the faces of investors. In the aggregate, 4 of the 19 listings now participated in trade. The day ended with 8 gainers, impressively no losers at all. The top gainer was Nation Media Group with a gain of at least 8.36%, closing at least 588.17 shillings. East African Brewers Limited as well came in as a top gainer. KCB, Centum, Equity Bank, and Jubilee Holdings as well came in as top most gainers. In terms of traded volume, Bank of Baroda recorded the highest volume, about 6.51 million shares. Yes, Bank of Baroda closed in with the price of 15 shillings and a total volume of 6.5 million shares. Currently, Bank of Baroda is still the number 1 most traded on stock due to this particular gain here, and they have traded within the last 3 months at least 60.5 million shares. Looking at other participants, Stanbic Bank had 528,200 shares. No wonder their performance so far. DFCU 500 shares. Wumeme had about 217 shares. And that was it for today. Regarding the performance of the USE indices, the USE All Share Index at least moved up by 5.65 points and closed in at least at 927 points. And currently they are on a 1-week loss of at least 0.07% and a 4-week gain of at least 7.21%. And an overall year-to-date gain yet of about 6.3%. The USE Local Company Index increased also by 0.04% to reach 265.39 points, making it a 1-week loss of 0.57% and a 4-week loss of at least 1.3%. That's it from the Uganda Stock Exchange. Thank you, ladies and gentlemen, for tuning into Smart 24 TV, and thank you for joining me once again. My name is Anthony. Remember, I'm here every Monday, Wednesday, and Friday at 9 p.m. to give you updates in the world of financial markets. Thank you, and